Well, what a day we had in the stock market yesterday. We're going to see what happened and also what that means for us investors in the long term and what caused the massive spike up yesterday in a lot of share prices. Let's get started. So you can see yesterday the stock market was actually having a pretty flat day. There wasn't really much going on. And then you can see here around about 1:30, the stock market exploded and we had a massive rally in the S&P 500 by 3%. This was also the same in the Nasdaq. We had a massive spike up and that meant a lot of individual stocks like Google from that same time frame was up 6% on the day. Microsoft was up 6% on the day. Meta actually having a good day, up 7%, nearly 8% on the day. That led into the growth stocks as well. You had the likes of DraftKings. I mean, look at that spike up there. 6% up on the day. HIMS up 5% on the day. Mercado Libre up 4.6%. And it has to be a really good day for Gang to have a good day. Even Gang was like, yep, I'm going to join in this today. And it was up nearly 9% on the day as well. So what caused it? You can see here, it all roughly goes around the same time. What was the spike? Well, Jerome Powell, he actually gave the market some positive news and actually sent the stock market up when he spoke, which is unbelievable to see. So basically, Jerome Powell came out and he was talking in Washington and he basically said that he can see smaller interest rates hikes and it could start in December. And obviously the stock market like this, the sentiment changing around these interest rate hikes and they start to get lowered down, and the market basically yesterday was pricing in that these big increases of 75 basis points were now going to get reduced down to 50 basis points and could potentially go lower and lower through 2023. So that was what the market was doing. They were basically pricing in what the Fed are going to say in December time. I think it's around the 13th of December that we start to see the lower increases of these interest hikes. And that is really important for us when we go into 2023. Now, it is worth saying that when you see the market start to price in a 50 basis point hike, when we do get to I think it's the 13th of December when the actual interest rate hike is announced, if it is 50 basis points, we might not see that much of a reaction now because it has started to get priced in. What would be interesting is if Jerome Powell then came out and went, oh, you know what I told you, we've got another set of inflation data since then, and actually it wasn't as good as what we were hoping for, so actually we're going to stick for, a 75 basis points hike right now. Then all of a sudden you'll see the market go, whoa, we just priced in that you were lowering them. That would actually see quite an awful December. So that's actually something really important to kind of keep an eye on. But if we go to 2023, there's really important checklists for if we see the stock market do well, in my opinion. And the number two priorities, number one and number two, is inflation and rates, the interest rates. Now, obviously inflation, these two are tied together because if you have high interest rates, obviously that's because they're combating the inflation at the moment. And as we see at the moment, inflation is coming down. It's slowly starting to make its way back down. Now, obviously, we'll have an even better idea in a couple of weeks' time when we get the new set of inflation data out for November. But at the moment, this looks really positive for 2023. And with that going down, that's going to help us have a good year in 2023. The next thing is interest rates. Interest rates, obviously, at the moment are harming the economy. And why are they going up? It's to combat inflation. So if inflation keeps going down, we're going to see more of these statements into 2023 from Jerome Powell, where he's like, okay, we can cool it down a little bit. We go from 75 basis points down to 50. We go from 50 down to 25. And then towards the back end of the year, potentially could we see that's it, interest rates are not going up anymore? Or could we even see a reduction in 2023? And that's obviously going to be key for the stock market as well in 2023. But at the moment, what has caused such a poor 2022 is all these things on this list. And obviously two of the really important things at the moment, inflation is coming down. And if that is coming down, we see what we got just yesterday, them interest rates coming down as well. So two of the key problems that caused us to have such a bad 2022 are obviously starting to look to get resolved, which is really good for us investors in 2023. The next one's oil. Oil's actually been coming down a little bit recently. As long as it can keep coming down, that's ideally what we need in 2023 to, have a good year, because we've seen this impact so many businesses. I mean, I should have really put oil and logistics as two things that have caused a poor 2022. But if oil comes down, obviously that's been a main cause of inflation and put a lot of pressures on businesses, put a lot of pressures on consumers. Obviously, if that keeps coming down, that's obviously good for investors, the economy out there. And Ideally, if we can see this probably go down to the $70 range, that would probably be better. If we can, that would put us near 2021 prices. And I should have put logistic issues as another one on here. We've seen here now, actually, like the container costs are actually back down to like, pre-pandemic levels. So that's another positive as well. That's been, how many businesses have you heard have come out and said, oh, our logistic costs have gone up, 2x, 3x. And if they start coming down, obviously that's going to help businesses and give them a bit of a tailwind into 2023 when you see them report numbers. And you'll be saying, oh, we managed to get cheaper logistics and that improved gross margins by 1-2%. That's something that could be really important. FX. How big has FX come in these last 2 quarters for businesses? The amount of times you're hearing businesses in conference calls go, I'm going to put a tick there for oil because it is coming down. The amount of times that in conference calls have you seen people go, oh, the FX is, if it wasn't for that, we would have actually grown an extra, 3% on revenue. So if that keeps coming down the way it's coming down, which it has done in the last few months, obviously that's another benefit for the stock market in 2023. China has caused problems in the stock market in 2022, so we need that to resolve going into 2023. That is obviously to do with the lockdown situations. We've seen the opposite to kind of what's going on in the world at the moment, where in the world, everyone's kind of dealt and living with the CV situation. China still has this policy of if we get 2 cases, we lock the whole city down. And that's obviously causing impacts on the Chinese economy. It is causing impacts on like supply chains, because obviously supply chains are getting messed up because of the China locking down. And that's obviously caused probably some of this pressure of inflation at the moment. And obviously we don't want to see that happening too much, and at the moment it is happening at the moment and continues to happen going into next year. Now, obviously, I'm sure you've seen on the news at the moment that there's quite a few protests against these lockdowns continuing to happen, so maybe that eases it up and we don't see as many lockdowns, but I think this is still pretty much a pressure going into 2023, so it could be resolved, but at the moment it definitely is still as bad of a situation as where I would say for most of 2022. So there's not much change in that one for me. Russia invasion, obviously we know this has caused some impact in the economy, mostly in Europe, and that's affected some businesses. So we know that's a pressure that's happening in 2022. I can't really, obviously this situation can change rapidly within 24 hours, but I can't see much all change in that situation. So I think this is something that will continue in 2023. So, I mean, obviously there's 2 of the main issues that have continued into next year more than likely. But when you look at I would say the 4 biggest impacts of businesses in 2022, most of these big impacts look like they could potentially get resolved moving into the next year. And if this is and we saw the benefit of what that did for share prices yesterday, and what the benefit of inflation coming down, that also impacts, these interest rates. We saw how much that can help the market and help the market move into a bit more of a positive sentiment. And the more that these 2 improve, and obviously these 2 are kind of big drivers of, this, well, maybe not this one, but this one in particular, the more that these improve moving into that next year, obviously is what will cause a very good stock market and a stock market that does well next year. And, the main drivers of a poor, last 12 months. So yeah, I thought yesterday was a key example of what can happen with a bit of more positive sentiment. And the more that kind of continues through the next few months, we're kind of lining ourselves up for what I'd say looks a good position next year. But we'll see what happens. But yeah, thought I'd just talk about that. Anyway, guys, hope you enjoyed it. Catch you in a bit.